Hello again friends, I'm back with another video, this time regarding a stock which has been seeing a slight slip in performance in recent days, and this is of course Clean Energy Fuels, or ticker symbol CLNE. There has been a fair bit of excitement around CLNE in recent months due to the recent deal struck with online retail giant Amazon to provide renewable gas fuels to part of their fleet as part of Amazon's goals to go increasingly green in their operations. The deal sent many retail traders into a frenzy and represents the biggest deal in clean energy fuels' nearly 20-year history. So why is it that the clean energy stock price has been declining despite this positive news? And what will the future hold for the company? These are the two questions I will aim to provide commentary on in this video. So Amazon and Clean Energy Fuels have actually been working together for a few years on a small scale prior to this deal. However, what this new deal does represent is a significant upscale in commitment to renewable gas from Clean Energy Fuels for Amazon. Prior to the announcement, the Clean Energy Fuel share price has moved between the $2 and $20 mark throughout much of its history. However, in its recent trading history, its share price has ranged more between the $2 and $4 mark. This is, of course, until that announcement from Amazon regarding the deal to buy Clean Energy's RNG fuels. So what you can kind of see on the chart here is towards the end of 2020, when there was talks around the deal started, there was actually a big acceleration in the price, and as the deal was signed and stuff, we kind of had this flattening out range along here. But then there was a little bit of a decline, and we've since seen a bit of a increase. But in more recent days, and what we want to focus on a little bit here is what is causing this decline here, and whether or not that decline actually represents a good entry point to buy into the stock, or perhaps a trend that we're going to see with the share price to continue moving down. As you can see from this stock here, I have actually moved into the stock as of June, owning 534 shares. So it's not a huge position, but it's a decent sized position. It was up for a while, but it has gone down. So I've got an interest in seeing the share go back up. To shed some further light on what's going on with the share price of CLNE, we will have to dive a little bit deeper into the nature of the financials of the company, as well as the deal with Amazon. So the thing I particularly like about Clean Energy Fuels, particularly its RNG offering from farm manure, which is predominantly from cows, is that it has a carbon negative impact on emissions. It is arguably the best renewable energy source on the market. It takes a waste product, methane, from cow manure, which was going to be produced anyway by the cattle and dairy industries, and turns it into a fuel source, which has zero emissions. So if people are legitimately keen on going green, there should be a greater focus on this sort of fuel source rather than the wind, solar, electric vehicles and hydrogen sources, which seem to be the favoured strategies of governments and big businesses. It would be nice if RNG could be included in that mix of preferred strategies for combating climate change, as it's potentially the best out of all of them. However, the fact that it does not have mainstream acceptance does have a negative effect on the share price. Clean Energy Fuels also has not had the strongest financial performance for a company that has been around for as long as it has. Despite society's larger than ever emphasis on fighting climate change in the past few years, Clean Energy's revenues have stagnated or dropped during that period. Specifically, its annual revenues were $364.4 million, $344.1 million, and $291.7 million in 2018, 19, and 20. Respectively. Although Clean Energy Fuels was founded 20 years ago, its operating income continues to be negative or only slightly positive, coming in at negative $19.2 million, negative $9.9 million, and $8.9 million over the past 3 years. It is hard to materially predict at this stage how much the Amazon deal will change this going forward, but you would have to assume that it will bring about an improvement to these figures in the near future. Now, looking at the Amazon deal, which in a nutshell is as follows. Clean Energy Fuels will build 19 new stations and make available 27 existing stations to fuel Amazon's fleet, making a total of 46 stations available for Amazon's use of RNG. Amazon is able to purchase 20% of Clean Energy Fuels at a share price of $13.49 if they purchase $500 million of fuel or more. This is the point that has perhaps led to the greatest amount of enthusiasm from retail investors who have helped push the price up almost 100% year to date. Now, there was a rally in the lead up to the shareholder meetings for both Amazon and Clean Energy Fuels in June this year. As you can see from this area here. However, which is also around the point that I bought into the stock. However, there was no announcement about Amazon buying into the company in either of these meetings, so perhaps that's actually been the catalyst for this slight rate of decline we are seeing here. However, the price that Amazon is looking to buy the share is represented by this line here at $13.49. So currently the share price is actually sitting well below that, and that does represent a decent discount on the share price if Amazon is to go forward and purchase 20% of the business. So if you're thinking that Amazon may buy into the business, right now might actually be a great time to be buying into clean energy fuels. Now, the Amazon option to acquire 20% of the company is actually contingent on a spend of $500 million of clean energy fuels R&D. Judging by this most recent quarterly statement of revenue, this is a figure that is not going to be arrived at instantly. $500 million represents almost 2 years of clean energy fuels total revenues prior to the deal. So questions have to be asked regarding how long will it take to scale up to this level for clean energy and for Amazon to adjust their logistics to best utilize the fuel station network that is planned for use. There is another element that is worth discussing. That is the scale of this deal for Amazon. This is a headline from over 2 years ago. Amazon shipping costs hit record $9 billion in latest quarter, total nearly $28 billion for 2018. So it seems like quite a high amount. Since this headline, Amazon has only ballooned further as a company, and with today's current high fuel prices, this annual shipping figure is much higher. In the most recent year, Amazon reported spending $61 billion on shipping costs. So this clean energy deal represents only a drop in a vast ocean for Amazon's shipping costs. So if they were to scale their use of RNG further, it would likely come at a large cost of upgrading their existing fleet of delivery vehicles. However, my understanding is the clean energy deal is more targeted for their larger distribution trucks rather than their delivery van network. Also, it is worth pointing out that Amazon has also recently spent big money in the EV scene through its much larger scale purchase of 100,000 electric vans by the year 2030 from company Rivian. So clearly RNG is not Amazon's sole or central focus when it comes to going green. So what conclusions can we draw? The revenues from Amazon may not bring about an overnight jump in revenues for CLNE of any significant scale, but it does represent a boost in future sales for sure. If Amazon does acquire a 20% stake in the company, that values existing shares at $10 at an absolute bargain price, so it would represent a great point to buy in. However, the downside is that they may not actually even go forward with buying 20% of the company. That's just, I guess, best case scenario. At this stage, it's still hard to see RNG becoming a meaningfully adopted strategy by governments and other big businesses. So despite this Amazon deal, it doesn't necessarily mean clean energy fuels is going to become this huge global player, which I guess most people would love to see it. It'd be great if it did, because RNG obviously represents one of the better green sources of power that we can tap into. But at this stage, I don't see it becoming widely adopted by governments or big businesses. Anyway, thanks for watching. If you found this video enjoyable or useful, please give the video a like and consider subscribing to the channel. These are the best ways that you can help out a small channel such as mine. Until next time, thanks for watching everyone. I'll see you later. Bye.